Hello, everybody. We're going to go ahead and get right into this stock market weekly recap here. So, what do we have going on? We're first going to talk about the indices, talk about my portfolios, and then we're going to get into some news. So, let's start here with the Dow Jones. As we always do, the Dow Jones this week was down 1.93. Not the world's greatest week, but all things considered, a very boring week. I thought it could be a bigger week than it was, but I think next week is the one to look out for. So this boring week could lead to a very big week next week. Year to date, Dow's down 16.7. Pretty crazy. If you think a year out, we're only down 10% from this point a year ago. But who am I to say anything? The S&P 500 was a little bit better here, down 1.32. Year to date, down 12.2. And only a year out, down only 3.5. Holy crap. And who performed even better? That's right, the NASDAQ did. You know that the NASDAQ did pretty well flat on the week, down 0.18. On the month, up 15%. And 1 year out, that's right, 6.15% up. Year to date, it's only down 3.77 for the NASDAQ. And it makes sense. Very tech-heavy indice, and tech companies have been doing well because they're not the ones affected nearly as much as other companies. So that'll be it for the indices there. Next week, expect a big week, either up or down. I don't think it's going to be a very boring week. I think it's going to be a big up week. It's going to be a big down week. Then we have our portfolio. So we're going to start with the Robinhood portfolio. On the week for the Robinhood portfolio, I'm down 0.45. Nothing major. 13,500 on this one. No major changes going on here. I really didn't add any money this week just because I'm kind of waiting for a dip next week, and I plan on adding quite a bit of money if it does. The only change you might see on the right-hand side here, if you're looking, would be a couple dividend reinvestments. You see Cisco had 0.03 shares purchased based off a dividend. Pretty boring. What else do we have as far as that? ARI, nearly of one full share there, was exciting. PSEC, 0.37 shares purchased off of that dividend. That was pretty nice there. And DIV, one of my companies that is it's an EFT focused on it's a super dividend fund, and guess what? 0.03 share of that too, so that's exciting too, right? Then if we look at our M1 portfolio, that's right, we've renamed it. This is going to be $1 million portfolio by the time I'm age 40, okay? That's what I've coined this at, and it's what I'm going to keep myself to. So there's many reasons how I can get this. So we're going to go ahead and see, just look here. I've been around here in this thing since July of 2018. Since then, a nice earned dividend number of 253, and that number just keeps rising steadily. Overall, if you look by positions, I'm actually down 10%, all things considered, but that's because that's what happens when you start in 2018. It was a bad time to start. What can I say? Now it's fantastic. We had a very good bull run, but still. Return overall in the past week was down 2.86, so not a good performance this week on a money-weighted aspect. By no means did we have a good week on a money-weighted aspect, but that's, again, time-weighted instead of actually based off the position. So you don't see as good a week in that aspect if you're looking at these numbers. M1 just tracks it weird. I don't know why the reasoning is, but they're doing something different. But overall, nothing too crazy this week. Pretty well flat week for me. So next in the news, obviously, we have definitely need to talk about this. States reopening. So this is really what's driving the market right now. The hope that states will be reopening. And frankly, I think we will have a lot of states reopening. Now, it will happen in phases. That's the main thing. Here's a list of states here that are creating phases right now for reopening. So Georgia's pretty well saying starting Monday, they're just going to go ahead and do it all. Loose restrictions, they're just blowing it out. And I want to see how that goes for many reasons. So my opinion on this, obviously, is that I think this shutdown has been a little outrageous. I understand the reasoning for it, and I think through mitigation, we've definitely alleviated some of the pain we could have felt by this, but economically, we're destroying ourselves for years now because of this, and I understand the point of saving lives. I hate to say there's obviously negatives to it, but there are studies out there showing that there's a good chance that 25 to even 50% more of the population have had this disease that we don't know about, that have already gone through it, that have antibodies discovered. California antibody studies have shown that, and I think we'll see that more and more. Infection rate's pretty high on this thing. So a lot of people probably had this, and it's been in our country longer than our first, case that we actually tested on the 27th or in February. It's definitely been way longer in this country, no doubt about it. We're talking back to December is when this thing was probably here. So people have already developed antibodies to it, no doubt. We've had this thing definitely hidden through us. So definitely some states reopening, plenty of them. So I'm excited to see what goes on there this next week. A lot of the non-essentials are opening, mostly like restaurants, barber shops, stuff like that. Those are going to be the ones opening. You're not necessarily going to see any sort of mass gatherings or anything like that. Casinos probably not, but most of these places are just reopening a little bit. And I think that's fine. I know a lot of people, they like to shun the idea of thinking about Sweden, but Sweden's done pretty well in this, if you think about it. And Sweden's had no lockdown. They haven't locked down at all through any of this. If you look at mortality rates and stuff like that, right now, actually, I know a lot of people are crapping on the U.S. It makes sense because we're obviously leading in the death toll. But if you look at deaths if we're looking at a per capita basis and a case fatality basis, we're actually performing relatively well. So our deaths per 100,000 people is 15.8. Where if you look at somewhere like Sweden, which has no restrictions at all, it's actually 21.13, and everyone's touted them for being fantastic at this. All things considered, they have no lockdown, and I understand ours will go up because of it. But if you look at it, it's really some hotbeds that are really the issues right now. You're talking about very overpopulated cities where people are stacked on top of each other. That's where you're going to see the most issue with this. And it sucks having the vast majority, 90-something% of people on lockdown when this really is only going to be affecting a few areas of the country. There's a lot of people that need to get back to work right now. They have families to support. And government can't afford to be paying out unemployment this much unless we plan on just completely blowing out national deficit more than we already have. But to each their own. I don't know how this looks to you, but I think it's time to reopen. And I know we will probably lose people, but it scares me to say. I hate the fact that we lose 600,000 people in the world to cancer every single year too. I mean, we're going to lose a lot more to cancer this year than we are by reopening the economy. And I hate to say it, probably a lot more now because of this, but regardless, it's just, it's sucky, but it's something we have to do. It's a bullet we have to bite, because regardless of when you reopen, you're going to see a resurgence of cases. So it's probably about time, in my opinion. So, yeah. As far as news, obviously, we have talks about reopening. Reopening in parts is needed, as according to Dr. Fauci. We have to be a safe and measured way. Instead of just flipping the switch, obviously do it in phases, which we all are. It's what's going on. We have Wynn Resorts talking about reopening in a 23-page paper. They're talking about details of how they're going to do it. With all the sanctions and security necessary, reopening and continuing operations are going to be highly labor intensive. They're going to need to do a lot of sanitizing, a lot of cleaning, stuff like that. But they've pretty much laid out a very straightforward plan. of how they plan to get back to business, which is major if you're a Wynn shareholder. And if you were, when it went down to $40, gosh, you were smart to pick up more if you were buying it at $40. Shoot, I wish I had. Video game sales logged the best March in 12 freaking years because people have nothing really to do. And you think about that 12-year time frame, we're going back to 2008. When the recession hit, people had nothing to do also. So the people who were without work, they picked up hobbies like playing video games. So this is not too much of a shocker at all to see it match up with what you saw as a recession last time, because a lot of people are out of work right now, and a lot of people were out of work back then. So very cool for an industry that's been sucking. Video gaming has been down just on all aspects pretty much consistently for years now. So we have Facebook making their biggest investment ever, pouring $5.7 billion into India's Reliance Jio. They are basically planning, it's a 10% stake, they're planning on combining and making a mega app, kind of like a WeChat in India. Which, if you think about India, the market there's massive, certainly massive, because of how many people there obviously live in that country, but now that internet is a lot more prevalent than it once was, and I've went into it before about how prevalent internet used to be versus how it is now, whereas, before it only like 50% of their citizens had access to internet, now we're closer to 70%, I believe, so it's definitely just getting there. Internet access a lot more available worldwide. It was because the government was controlling it and weren't allowing people to have access. So that's really the issue there. But definitely could be a big thing for Facebook. We had the jobless claims report. That's right. 4.4 million. Definitely not exciting. That was against a consensus of 4.25. And a 5.23 prior. So definitely a little bit lesser, as we expect. Most people have already reported for it. And that's, again, why we got to get this economy rolling. That's a lot of people. Unemployment rate of about 20% right now. Shoot. Yeah, we got to get people back to work, no doubt. So can't have people just soaking up that unemployment. You know what I mean? Government can't pay for that. Stocks finished flat on, this was an article from Thursday. So the World Health Organization, the scam organization as I like to call them, Complete Hacks released a false report saying that the Chinese trial report for Gillette's remdesivir drug flopped in a randomized trial. And this is, again, the China report. And needless to say, it's come out now that this was a completely fake report. They completely falsified their data, and Gillette's now taking action against them for that. So this is completely false. Studies have actually shown that they're going well. They just didn't have participation originally, so they weren't able to have success. Now that they've got increased participation, and other trials have shown pretty much very good success for it. So we'll see how that looks. We have right here, auto restarts are considered too risky. It's too soon and too risky to reopen auto plants in Michigan's economy in early May, according to union piece of garbage president Rory Gamble. Sorry, the union of auto workers is just a nightmare to companies, I'll tell you that. They are a needy union. Insufficient scientific data in coronavirus testing to assure workplaces are safer. They didn't do it. But that's what sucks. Part of it, too, is just working for a union-type company like this. In these kind of situations, it's hard for people to get back to work because the union's probably not going to let them. But also Michigan, guess what? Michigan's just talking about no chance of reopening. And they've got a lot of cases going on right now, which I get. But a lot of that super rise in cases is, again, just because the frequency of testing's ramping up. So your frequency of cases ramps up. It's not necessarily that we're spreading it more than ever. It's that more people are getting tested positive for it because we're doing more tests. So, I don't know. At some point, they're going to have to open up. But obviously, car demand isn't massive. But these people do need to get back to work. We had the 400 $84 billion of financial aid to small businesses and hospitals. Another extension there of that. Shoot, I don't know. The amount of money that we are printing out it's a scary amount, and I understand the purpose of it. We don't want companies to go under. But I don't know. It's a lot of money. We are blowing through it. Golly. But we have obviously tech rally from Apple. Good days. We had some good days for tech companies. Tech sector did very well on Friday, or Thursday, I should say. No, it was Friday, actually. It was Friday they ended well. I'm sorry. They ended above what the regular indices did. And this is new from today. JP Morgan forecasted the GDP fell 9.9% in Q1 on a seasonally adjusted annual rate, which is horrible. Think about what Q2 could do. It could be rough. And I mentioned it's going to be Q1, Q2 are going to be the ones that are hit rough. We'll see recovery in 3 and 4, but it's going to be a rough couple of quarters. That 10% line that they're given, it definitely could be 100% accurate there, and I could see Q2 even further down, somewhere in the range of 20% potentially. So could be massive GDP falling here. And how will investors react to it? Typically, they would sell massively, but there are ways around it. We have big company earnings next week. Big tech is the ones reporting earnings next week. They will dictate how the market goes. I know it sounds weird, but this market's so unpredictable that I think the earnings probably will have a bigger impact than the GDP because investors have already priced in the GDP prior to this recent uptick. So I don't think they're going to resell again. Now, if they have bad earnings, the big tech companies, I could see some more selling for sure. The tech industry could get hammered because those are the stocks that have fared very well through this. But who knows? That's all I got for you today, and I hope you enjoy.